Welcome back to class, everyone. Go ahead and grab your favorite pastel highlighters and open up those digital notebooks. Today, we're taking those super dense MAF201 accounting formulas and, well, we're turning them into a beautifully structured, totally stress-free story. If you've ever stared at a budgeting question and just felt instantly overwhelmed, yeah, you're in the exact right place. We are going to master functional budgets together today. Okay, so here's our game plan for today's session. We'll start with the absolute basics, figure out who actually makes these budgets, and then we'll walk through the functional budget flow. After that, we're diving into the real step-by-step calculations, and I'll wrap it up with some crucial exam tips so you can dodge those common mistakes. All right, let's jump right into the foundation and get those basic concepts locked down. So, what actually is a budget? Look, the most important thing to remember here is that a budget is really just a detailed quantitative recipe. It's a clear statement showing exactly how a business plans to get and use its resources over a specific period of time. Basically, it outlines the rules a company has to follow to hit its goals. Think of it like your ultimate study schedule, but, for a company's cash and resources. And honestly, this right here is why we even bother with all the math in the first place. Budgets do a lot of heavy lifting. They force managers to actually look ahead and plan. They coordinate what different departments are doing, and they communicate the big picture to the whole team. Plus, having clear targets really motivates people. It helps control the day-to-day stuff, and at the end of the year, it gives us a concrete way to evaluate how well the managers actually did. So that's the what. But who is actually sitting down and writing all these rules? Well, it's a team effort. A budget isn't just cooked up by one person hiding out in a dark office somewhere. You've got the accountant who acts as the budget officer, making sure everything is formatted correctly and on time. But they have to collaborate with top management, meaning reps from every single department. This is super important because you need to make sure the sales team's wild goals actually line up with what the production team can realistically make. And this whole collaboration follows a really neat, logical flow. First, they lay out the guidelines for everyone. Then, they figure out if anything is holding them back, which we'll call restricting factors later on. Next comes the prep work, always starting with a sales budget. After that, everyone negotiates and coordinates, and finally, the whole thing gets reviewed and accepted. It's a really smooth, step-by-step journey. Okay, let's flip the page and look at how this math actually flows together in practice. Real quick, you might see the term operating budgets pop up on your exam. Don't let it trick you. An operating budget is literally the exact same thing as a functional budget. It's just dealing with the income-generating side of the business. And all these mini budgets eventually piece together to build the big, budgeted profit and loss account. Now, I need you to draw a massive, brightly colored star right here. This domino effect is the single most important concept in MF201. You absolutely cannot skip steps here. You have to start with the sales budget. Why? Because your expected sales dictate your production budget. Once you know what to make, that tells you exactly what materials and labor you need. Add in your overheads and boom, you've got your total production cost. If you mess up that very first domino, the sales, every other calculation is going to fall flat. Let's take this out of textbook land and actually run some numbers ourselves. We're going to use our simulated business, My Shop, to crunch some actual numbers for making jackets and trousers. Grab those calculators. Step 1, the sales budget. This is incredibly satisfying because it's so simple. You just take your expected sales units and multiply them by the selling price. So if My Shop expects to sell 4,800 jackets at 300 ringgit a pop, our total sales value is 1.44 million ringgit, just quantity times price. Easy points, right? Next, we take that sales number to build our production budget, which tells the factory how many items to physically make. We take our expected sales and we add our target closing stock because we want some extra left over on the shelves, right? Then we subtract our opening stock because we already have those sitting in the warehouse from last month. Expected sales plus closing stock minus opening stock equals the exact units we need to produce. Once we know how many jackets we're actually making, we jump to the material budget. First up, calculate total usage. That's the units to produce times the material needed per unit, say 3 meters of cloth for one jacket. Once you have that total usage, you do that exact same inventory math again. Add the target closing stock of material, subtract the opening stock of material. That tells you exactly what to buy from the supplier, which you then just multiply by the purchase price. Okay, listen, please don't panic when you see the labor budget on a test. It's actually one of the easiest marks you can score. It's literally just the units you're producing multiplied by the hours it takes to make one unit. That gives you total hours. Then just multiply those total hours by the worker's hourly wage rate. It's just a straight line of multiplication. You've totally got this. Finally, we take all of that hard work and plug it into one beautifully organized production cost budget. We bring in our direct material cost, our direct labor cost, and then we tack on the production overhead, both the variable and fixed parts. Add them all up, and you've got the total cost to produce your goods for that period. Now, before I show you the final answer for our MY Shop example, I want to test you. Based on the aesthetic calculations we just mapped out, if you were the accountant advising management, which product should MY Shop focus on producing, jackets or trousers? Think about the ultimate goal of the business here. If you said jackets, you are spot on. When we look at the profit statement, taking our total sales value minus our total production cost, jackets bring in a way higher profit. We're talking over 889,000 ringgit compared to just 497,000 for the trousers. So you'd absolutely tell management to focus on jackets to maximize that profitability. All right, we're in the home stretch class. Let's talk about how to ace this exam. Caution, I need you to put a huge red sticky note on this part. The #1 way students lose marks is by mixing up their inventory rules in these budgets. Let's make this a mantra. Always add closing stock and always subtract opening stock. Actually, let me say that again. Add closing, subtract opening. If you flip these by accident, that whole domino chain we talked about collapses, and every single calculation after it will be wrong. Just take a look here. This is a real past year exam solution. Do you see how perfectly neat this production budget is? Units to be sold, less opening stock, add closing stock, giving you budgeted units to produce. If you set up your columns clearly like this, you are making it so incredibly easy for your lecturer to just tick the boxes and give you full marks. Formatting really does matter. Ooh, and here's a golden nugget for the theory section. Memorize the term principal budget factor. It pops up all the time. It's basically the main constraint holding your production back. Budgets have to be built around whatever that limiting factor is, whether that's a massive shortage of raw materials, not having enough skilled workers, or just being short on cash. You always have to identify this factor first before doing anything else. And just like that, we've beautifully structured your functional budgets revision. Keep running through those formulas, remember your golden inventory rule, and never forget the domino effect. Because at the end of the day, a business without a budget is basically just a business planning to fail. So think about this as you head back to your notes. In your own life and career, are your available resources dictating your goals, or are your goals dictating how you use your resources? Keep up the great work, and I'll catch you in the next explainer.